Hello friends, in this video I will show you how can you predict yearly trends, the big trends which happen on daily. And for that we should look at the interest rates. I believe that daily trends and large moves are driven by the interest rates. Technical analysis on daily and weekly charts about daily, they perhaps do matter to some extent, but we have to look at the interest rates, and I will prove this to you that to predict big moves you need to look at the interest rates. For me it's very important. That's how you detect the big moves on daily. And then, of course, to fine-tune the entries, you use minor time frames. So let's take a look what happened to euro dollar when Fed had been increasing interest rates. Look here. You see month after month after Fed started to increase interest rates, we had this big move to the downside. Euro was crashing through the years 2018, 2019, and all because Fed was increasing interest rates while ECB just didn't increase at all. It was at zero. Only Fed was increasing. As a result, we had this big drop in euro. Price range was the euro dropped at some 1,747 pips, which is quite significant. So this drop was caused by the interest rate. So if you would know that ECB interest rates are at 0 and Fed is at 2 or 3, you know that euro will be going down. And that's what was happening. You would be looking for shorts in 2019, or say 2018. As soon as Fed started to decrease interest rates, you can see it here, we started to have euro going flat, and ultimately when Fed interest rates came to 0, we started to see the uptrend. 2020 uptrend was caused by the Fed dropping the interest rates. You see, and now we see the same situation in 2023. You see, as soon as Fed started to increase interest rates, euro started to drop very violently. We saw this drop, which of course was intensified. Fuel was also added by the war in Europe, in Ukraine, as you know. It was another factor, but the prime factor was that Fed started to increase interest rates, and if ECB wouldn't come in with starting to increase rates, we would see even further drop in Europe. But luckily, ECB woke up and started to increase interest rates as well. And immediately we saw euro to stall down at 1. It dropped almost to 95, and then it started going up. And that's why this year I predict euro to go to 116. And that's why I have been buying euro since February, since this dip here. I was buying euro, and actually you see we have a fractal replication from 2020, the same fractal you see, but on a larger scale, much larger scale as in 2020. And the prime factor here, of course, are the interest rates. This move is driven by the interest rates. There are a few other factors which also affect the price moves on daily, as for example NFP, but NFP is also related to the interest rates because it tells the number of employed people in the US, and this data is used by the Fed when they make decisions on interest rates. So NFP news are also related to the interest rates. That's why price reacts them to so violently, like with the interest. But prime factor in the daily moves are interest rates. You see, as soon as 2020, as soon as Fed dropped the interest rates, euro reacted quite violently. Fuel was added, of course, by the COVID crisis, and then it went up because usually when it is 0-0, when Fed interest rates are at 0, and same with ECB, then euro tends to go up. For some reason it reacts bullish when both are increasing rates, Fed and ECB. Euro still reacts more to the ECB rates because it is currency of European Union. That's why it is more important to look at ECB rates when you are trading euro. So here in the bottom we have Fed rates, the black color, and lower we have red color ECB rates. That's what I wanted to show you. And then of course you can use yearly pivots. That's what I use to predict yearly targets. For example, this year we target 116 because price usually tends to end at yearly pivots. Yearly pivots R1 or S1. It's so common. If you look back in history, you will see, let's add yearly pivots for 10 years. You will see, and we'll also add R2 and R3, so that you could see for yourself how important yearly pivots are when it comes to yearly targets. S2, R2, and S3, we will add them both. So look where euro ended last year. Euro ended at the yearly pivot, S3. Almost like 50 pips difference, almost to the point. S3 at 97. In 2020, euro ended at S1. The bottom was at S1 and then at R3 again. It ended here at S3 in 2020. In 2021, we almost made it to S1. Almost, well, we made it in January. We hit S1. So last year, as you see, at S3. Then if you look years before, for example 17, it ended at R2. There was a reaction at R1 also. Then in 2018 it almost reached R1, just a little bit, but by a few pips. But 2019 it ended at S1. So yearly pivots also predict yearly volatility, and as you see, to this year pivots are unusually wide. It means a lot of movement. We might see price even go to R2. But which yearly pivot price goes to? You use interest rates. That's the major reason, the direction. And then the target, of course, our first target is the yearly pivot R1, 116. That's what I target. It might take some time, of course, to enter. It might take even many months. We don't know. But since price is quite volatile, it might come there quite quick. So you see this replication of move. You see this here. This kind of this retracement is very similar as it was in 2020. That's why when I plotted the yearly pivots and I saw where is R1 and I saw that the ECB is increasing interest rates, I was pretty sure immediately that price will end at R1, replicating this move as in 2020 in very similar fashion. because this year we expect more volatility due to the large distance between the pivot and R1. I mean traditional yearly pivots. Remember those. Of course, we can use yearly Camarilla as well. You can use Camarilla pivots, which are also very useful. And price tends to end at R3 or S3. You see it tends to reverse at R3, so I would also, if you use Camarilla, you can also use extra level S4, which is the floor. I call it ceiling and the floor, S4. So this year price will surely reach R3 Camarilla. That's his reversal level. Price tends to reverse here above R3. So that's where I will see, we should see euro this year above R3, 112 to 117 in this area, and then we might see some reaction, major reaction in this area according to the Camarilla philosophy, because to know Camarilla pivot points you have to know how price reacts at different levels. It tends to reverse at R3 or R3. Here you see price reverse it at yearly R3. Here it broke above R4, above the yearly roof, and it made to R5. I didn't plot R5, but you can see also R5 here. You can plot it. So we use interest rates and pivots, yearly pivots, or Camarilla yearly pivots, traditional or Camarilla. Look here, it ended exactly at R5 in 2020. And this year R5 is very far, at 129. If price breaks through the roof at 117, it might go to 129 even this year. It will be very volatile year, definitely. It might go even to 129. I wouldn't exclude that. So that's why I have been buying euro since January. I have used, of course, other data, sentiment data, to fine-tune my entries, but for uptrends or downtrends on daily big moves, to know at least the direction, what is very important, you have to look at the yearly traditional pivots. At least for the majors. You see, I don't trade crosses because they are less predictable. I trade primarily only Euro USD. It's my favorite pair. For the past 3 months I have been trading only Euro USD. I didn't touch anything else. I don't need it. Why? Why do I need to disperse my attention on many pairs when just one pair is enough? If you know where it's going, you can trade even every day this pair. I mean, yesterday I was trading, making entries on euro. Today, you know, it's so easy if you know where a price is going. You know, you don't need other pairs to disperse your attention. Just concentrate on one pair, and then you will see that your trading will change if you put attention on one thing. I use euro because it's more predictable. There are so many tools to predict euro moves. For example, interest rates, which affect euro, and then of course we have more sentiment data on euro on any major analytical platform that provides sentiment data is very reliable when it comes to euro. So I concentrate only on the euro at the moment, and for many months already that's what I trade. So that's how you can predict yearly moves, yearly trends, using interest rates. You can use this on TradingView. You can plot automatically interest rates for euro and Federal Reserve, also for GBP. Here you see in 2006 was the same situation. Both Fed and ECB had been hiking interest rates, and they had been hiking all the way to 4. you see, and euro was going up, though Fed hikes and ECB hikes, and still euro going up, because I told you ECB decisions have more impact on the euro than Fed for some reason. And here it's even shooted up very much in 2008 because Fed started lowering interest rates and immediate reaction. And here you see as soon as ECB started lowering rates, we saw this volatility and the crash of euro. And the crash happened much before the actual decision of ECB to lower the rates. You see, the crash started already in July 2008, and the first lowering of the rates was only in October. It's because of the anticipation, the news that the ECB will lower interest rates came much earlier to the traders, to the banks, to the public. They knew that the ECB is gonna lower interest rates already in July. That's when the euro crash started, and the actual lowering took place only on 6th of October. Of course, crash continued after that. And then because Fed started lowering rates, of course, the news about this comes earlier, and market reacts as soon as they learn the news that Fed will lower the interest rate. That's why we saw this big move to the upside. It was driven by the Fed lowering interest rates, and then it crashed back because of the ECB lowering interest rates. Here we saw ECB hike interest rates twice. You see immediate reaction. The euro went up, but as soon as they learned that ECB is not going to hike anymore, price already started to go down before the actual decision. So, and here let's see further. Here we see ECB was lowering rates and Fed was at 0. So euro was still going up. This year, 2013, was a bit out of the frame. Price tended to go up, so logically, well, it was going down here, but it wasn't really strong a big uptrend. But overall, most of times, price strictly follows the interest rates longer term frames, and it reacts to the interest rate decisions beforehand, some months before the actual decision, if they know it. So if, for example, in May we will know that but we know that in May ECB will hike interest rates again. That's why euro is still going up. But if we would know immediately already now that in May ECB is not going to lower interest rates, we would see already euro reacting to this news, to this knowledge beforehand. It would start going down. But since we know the ECB is going to hike, it's still trending up, and we are going to see another hike, ECB hiking interest rates again in May. That's briefly about interest rates. That's what you have to watch when you trade Euro USD and majors. Watch the interest rates and then make decisions using extra tools, for example, yearly pivots, where the price is likely to end at during the year. I wish you success in your trading. God bless you and be well. All the best.